What's going on, guys? Welcome back to my YouTube channel. In today's video, I'm going to be breaking down this EURUSD trade that I took last week. I took this trade utilizing the 4-hour strategy. As you can see, I'm on the 4-hour time frame here. This is really the only time frame that I use. Occasionally, I'll check the daily time frame, but the majority of my trading occurs on the 4-hour time frame. Now, before I dive into this video, if you want more insight into how I trade, this exact strategy is explained in a long, detailed video on my YouTube channel. It's the 4-hour swing trading strategy video. I've had really good feedback on this video. It's changed a lot of people's perspectives on the market. A lot of people have the misinterpretation that they have to be on lower time frames or utilize 5 or 6 different time frames in top-down analysis in order to get profitable trades. But the reality is you can just stick to one time frame. It's possible. It definitely takes some more experience, but with that being said, on the higher time frame, it's actually quite a bit easier. So if you're trading only one time frame, but it's a low time frame like the 15-minute or the 30-minute, that might be a little bit tricky. You might suffer a low win rate at first. But for example, 4-hour and the daily time frame, these time frames are very easy to trade, guys. All it requires is a lot of patience. That's the only thing, right? And patience can't be taught. It has to be gained over time with experience and discipline. So I just wanted to preface this video with that. If you want to look more into the strategy that I'm about to explain, please head over to the full strategy breakdown on my YouTube channel, and I'm sure you'll gain some value from it. So without further ado, let's get into this EURUSD trade. So what attracted me to this trade to begin with was this consolidation, pretty much moving sideways, and then this huge bearish move to the downside. Now, just to make things a little more clear, let's use the replay tool here. So this is when I became interested in this trade. As price started reversing back to the upside, I realized this was a good point in time for me to draw my fib tool from swing high to swing low to identify the current bearish range that we were trading in. Now I'm interested in short positions, right? Because we have, like I said, a consolidation moving sideways and then a big push to the downside. That was the market showing us clear intent. Now what happened when we had that big push to the downside? We obviously broke through these lows here and cleared a bunch of sell-side liquidity from these lows, but we also left behind this massive imbalance as well as an order block way up here within the supply zone, right? So these two things combined, the order block and the imbalance, that alone is enough to tell me that I should be looking for a trading opportunity. Now we combine that with the market structure aspect of things, that we broke to the downside and we're looking for bearish continuation in this overall very large bearish trend that we're currently in on EURUSD. That signals to me that I should be looking for a short position, right? Pretty straightforward. Now, in terms of liquidity, I get this question so frequently, and I've been asked to do videos about liquidity. Liquidity is part of every trade that I take. Like, understanding where liquidity is in the market is a crucial aspect of trading this style, or any style for that matter. There's a common phrase that goes, if you can't see the liquidity, you will be the liquidity, right? So before we take a trade, we have to identify where liquidity may be resting in the market. Now, let's focus on buy-side liquidity first, okay? Which means all the liquidity resting above. Because if I'm taking a short position, I want to know that buy-side liquidity has been purged first, because that makes me feel a little bit safer about my directional bias. So in terms of buy-side liquidity, liquidity is typically resting above highs, such as this here, and another one being this one here, right? Those 3 highs that I just identified, typical retail traders would put their stop losses above those highs. So it's not as simple as that. That's just a very rudimentary way to describe it. But a lot of liquidity rests above major highs and major lows. So in this case, I'm looking for buy-side liquidity to be swept or purged or raided, whatever you want to call it these days, before I'm interested in taking a short position. So we can see all of these highs are building up, and then we start moving to the upside, right? Now this wick right here, that's identified by this arrow tool, that is the sweep of liquidity, okay? That wick right there pushed through all of the previous highs, purging liquidity from those highs, okay? Now after that happens, we make a sharp move to the downside. We don't really make a new low yet, but then we come back up and fail to make a new high, right? So these highs here fail to push above this high right here. So that's a bit of a warning sign that direction may be changing pretty soon. Now, once we failed to make that high, you can see we started moving very abruptly to the downside, and that's when we left behind this imbalance and this order block here, right? So all of these things combined, that's what tells me I need to be taking a short trade here. It's like building up a story in anticipation for something else to happen next, right? Now, another form of liquidity that we can see here is this trend line liquidity. As many of us should know by now, trend lines can maybe present short-term trading opportunities, but long-term they always fail. It's a typical retail strategy, which means there's a bunch of resting liquidity around those trend lines as well. So to me, whenever I see trend lines like this, it represents liquidity, because if you just extend it a little further, you can anticipate that most traders are going to be buying once price reaches that trend line again. They want to be buying so that, hopefully they get continuous bounces off of that trend line. But in reality, that's just not how the market works, right? So whenever we spot trend lines like that, that's another form of liquidity, and it adds confluence to this overall trade idea of the market continuing bearish. So guys, this Euro USD trade that we've been talking about, this was actually part of a challenge that I'm doing. I obviously have personal trading accounts as well, but I've decided to up my prop firm capital and go for a 200K challenge with the funded engineer. Now, a lot of research and due diligence went into choosing this firm. So they're located in Dubai. They've got a great support team, great owner as well, who's very transparent and open on social media platforms. A lot went into choosing this firm, and I'm very confident with it. So I started this 200K challenge. I chose the 200K Superior two-phase challenge. There's a few different ones to choose from here, but I felt that this one worked best for me and my trading style. Now, you can choose from MT5, MT4, Purple Trading as the broker, Think Markets as the broker, and you can also add a 90-10 profit share to your challenge. So it's like a little add-on thing, which is really cool. Now, if you go to the left side here and click My Challenges, it'll show you all your active challenges that are in progress. As you guys can see, I have a 200K account in progress. So let's view the details, and I want to break it down for you a little bit. So this is the dashboard where it shows you the analytics of your account and your trading. So it's pretty straightforward. Unfortunately, I don't have too much to talk about here because I started this challenge recently. And if we scroll down to the bottom, I took 2 losses right off the bat, and then I had a nice win that made up for it and then some. So I'm definitely in profit right now, but it's still pretty early on in this challenge. So I'll definitely keep you guys updated in future videos on how this challenge has progressed. I'm looking to add this 200K to my portfolio pretty soon. That'll be nice. Looking forward to it. And so far, I've got nothing bad to say. Like, the conditions have been really good. Executions have been nice. No slippage, obviously. So far, so good. I'll definitely keep you guys updated as this challenge progresses. I will definitely include it in my future content. But I wanted to give you guys this breakdown on Funded Engineer because I think what they're doing is really good. I think there's a lot that differentiates them from other prop firms in the space. So I'm looking forward to see how they grow as a company and with the industry as a whole. And if you guys are interested in trading with them as well, starting a challenge with them, they've got a ton of different account sizes here from 6K all the way up to 500K, which is wild. I might have to do that one next. If you'd like to get started with Funded Engineer today, find the link in the description of this video and it'll take you right to here. So now that we've discussed liquidity in depth and also identified that we have imbalance and an order block, that's when I drew my fib tool, right, from swing high right here to the swing low all the way down here. Now you can see that the numbers on my chart on the Fibonacci tool are 0.71 and 0.79. So technically anything above 50% of this range, right? Anything above the 50% mark of this bearish range would be considered premium prices. But I take it a step further with my fib tool and I identify extreme premium prices or extreme discount prices in a buying scenario, right? So the 71 and the 79 to me represent extreme premium prices that I like to typically get involved in the market with. So I typically always set a limit order at the 71% if all my confluences have previously been checked off. Like if the trade makes sense and I'm good to go, I will set a limit order at the 71%. And it's an easy way to frame my trade, right? I put the limit order there. I set my stop loss right to the high, and I set my take profit right to the low. And I use the magnet tool on TradingView so I can literally just snap the position tool to that high, snap the take profit down here right to that low, and I know it's going to be very exact, okay? I don't use fib extensions and take price, into the future. All I'm looking for is for this low to be rated, because as we know, we just discussed with liquidity concepts, major highs and major lows have a bunch of resting liquidity above and beneath them. Well, this is another low right here, so I know that there's liquidity resting beneath it. So instead of targeting a Fibonacci extension number, I'm just simply targeting the low right here. Now, sure, it may not be as flashy as a 1 to 10 or a 1 to 15 risk reward ratio trade. I have a fixed risk reward ratio of 2.45R all the time. Unless I go to the 0.79% level, then it's a little over 3R. But typically I'm entering at the 71%. So that's a fixed risk reward of 2.45R. Now I'd like to play price forward, and I want to explain what happens here a little bit more. So I might as well just play the whole thing forward. We know what happens here, right? So I want to express the importance of how price approached my entry, okay? Let me draw it out for you guys. So we had the consolidation, we had a big drop to the downside, and then price correctively moved up towards where I wanted to enter, and then it dropped in my favor, right? This is exactly what I'm looking for in terms of how I want price to behave in anticipation for my trade to be triggered. Now I'll show you what I don't want to see. If price is, let's say we have that correction and then a big push to the downside, and that's when I was interested in taking a short. Well, if price just pushed up immediately and made like a sharp V formation like that, I would be very, very cautious of that, because typically what happens when that sharp V formation occurs is we either trigger in the trade and start consolidating for like multiple days, which is extremely frustrating, or what could happen in this case is that we just continue pushing through and just violate the stop loss right away. So whenever there's a sharp V formation like that, it's a warning sign. It's typically never a good thing. Obviously, in the odd situation, it can work out for you, but more times than not, in my experience, I've seen that it just doesn't work out. So whenever there's a sharp V correction, I'm very cautious of that, and I typically throw away my trading idea if that happens, right? So in this case, we see the opposite of that. We see a very sharp move to the downside, showing clear intent in the market, and then a very corrective move back to the upside into premium prices. And that's where I entered, right at the 71%. And you can see this sharp move down again that took out this low here and inevitably hit my take profit. Now, this move, this bearish move here, that was in the middle of high impact US dollar news. So that's definitely a reason for the momentum, but I'm a firm believer that these news events don't dictate the direction in the market unless it's like a serious unforeseen geopolitical event. But if it's just typical like economic data, it doesn't change the market direction. It just adds momentum, right? It acts as a driving force to take price to where it should be going anyways. And that's why I'm a firm believer that technical analysis is king. It matters much more to me than fundamental analysis. And that's why there's pretty much no fundamental analysis within my trading plan. I'm always aware of high impact news events, but it doesn't necessarily change my trading ideas overall. This was a detailed breakdown of this recent trade I took. It's almost identical to so many others that I take and that I share within my Discord community. I did share this one as well at the beginning of the week, and it took place at the end of the week. So everybody in my community had ample amount of time to study this price action and decide whether or not they want to trade it themselves, and make their own decisions based on what they see. This trade idea was shared well ahead of time. So if you'd like to join the Discord community, the Currency Pros Academy, click the link in the description of this video, because I share trades like this once or twice a week. I'm definitely more of a swing trader. This trade obviously occurred very quickly once it was triggered in, but typically I'm holding trades from anywhere from 1 to 5 days. That's kind of my average hold time. So I'm definitely a bit more of a swing trader. I favor these higher time frames. I'm always on the 4-hour time frame. It's a very relaxed style of trading, and I'm quite happy with it. So I'm definitely going to be continuing this style of trading. So I hope you guys really enjoyed this video. If you did, like the video, please comment down below. And if you haven't already, subscribe to the channel, because I'm going to be dropping a lot more videos like this. I try and upload every week, but it's typically every 2 weeks if I'm being honest. But I'm going to continue putting a lot of effort into this YouTube channel. I like creating content for you guys, and I'm going to keep uploading it here for free for everybody to enjoy and gain that value from. So again, please hit that subscribe button, share this video with somebody, a trader friend of yours, if you feel like it would help them out. And yeah, I appreciate you guys watching. So I'll talk to you all soon.